common first step when you're wanting to buy a home is to get pre-qualified or get pre-approved. So you submit an application, but what does it actually mean? What is actually happening? We need to know first that your credit score meets the minimum needed for the loan program. What we're going to do is pull a copy of your credit report that's going to be from each of the credit bureaus, TransUnion, Equifax, and Experian. We're going to look at the middle credit score. If there is more than one bar, we're going to look at the lower middle credit score. What we're then going to be looking at is the credit history, meaning are there any past credit issues like late payments or collections or even a foreclosure and a bankruptcy. So keep in mind that when we're looking at any kind of current debts or expenses, we're really going to look at what's reflecting on the credit report. So that's going to be things like credit cards. Now, if you pay your balance off every month, what we're counting is the minimum payment that's required. Once we've got that all settled, then what we're going to look at is income. If you are actively employed, what type of an employee are you? Are you 1099 or are you W-2? Because depending on the source of your income and how long you've had it can impact how much we can count. Also, if parts of your income are things like bonus or commission, or maybe you have variable hours, a beneficiary IRA or child support or alimony, we have to get into a little bit more detail on how long you've received that, so then we know how much we can count. And then the third category is going to be assets, from the standpoint of what is going to be the source of your down payment. Are they funds that you already have? Are you selling a home? Are you getting a gift? Are we using down payment assistance? Depending also how those assets are held may impact how much of those assets can be counted. Once we have all of those components, those three main pillars of a loan application, we're then going to be looking at what are your goals for the purchase, target sales price or target monthly payment. After all of that work is done, what you'll then hear from me are pre-qualification details. And that's going to say, based off the information you've told me and based off of your credit report, I'm going to recommend this loan type with this down payment, and then here's the estimated monthly payment. The next step from that is we're going to move right into pre-approval. And pre-approval is where we're going to get the documentation that backs up everything that you just put in your loan app. And then that way we can have underwriting review it, make sure that everything is set before you fall in love with a home and put it under contract. So yes, submitting an application, you are answering a lot of questions. And the reason that we're asking all these detailed questions is because that helps us then formulate the best mortgage strategy for you. So although it would be wonderful if you could have an answer immediately, there is still quite a bit of manual work that goes into reviewing an application to make sure that the answer that we're giving you is both accurate and also actionable.